Um, this is kind of shoot from the hip day, since I thought I'd be here with MetLife. That's who I'd been here as before. I decided to make a change that I think is a betterment for my clients primarily, and I turned in my 2-week notice, and they gave me a FedEx label to ship back everything that I had that wasn't mine. So I didn't get the 2 weeks. However, I went to Envoy because now, instead of representing just MetLife, I represent them and 3 other banks to do reverse mortgages for seniors. I think it gives me more flexibility, more options for the individuals, and able to get more people into the program. The other half of the shoot from the hip is, this was put together last night. I haven't seen it yet. But just a little bit of an overview on Envoy. Yeah, they've been in business for over 15 years. They're based out of Houston, Texas. First lender outside of Milwaukee to offer the reverse mortgage 8 years ago. So it's not something new for them. It's not something that they haven't done before. The basics: tax-free cash from the equity in a senior's home. It varies based on their age. You have to be 62 years old to qualify. The older you are, this is the one program that the older you are, the better it is. The older you are, the more you qualify for. Real simple underwriting. How old are you? How much is the house worth? We don't care about credit. I shouldn't say we don't care about it. Hopefully we're enhancing a credit situation if there is a problem. But since we don't require people to make a payment once they're in this program, we're not credit underwriting. The basic gist of it is, again, a person 62 or older has some equity in their home. They may have an outstanding mortgage, they may not, but they need to enhance their lifestyle one way or another, improve their cash flow, eliminate some debt. If they have a mortgage, we'll put them into the reverse mortgage program, and we will pay off their existing loan. So long as they stay in the home, again, they don't have to make any home payments. They do have to maintain their real estate taxes and their property insurance, but no mortgage payments. They can take funds out for any reason whatsoever up to their guaranteed benefit amount. That money is tax-free, as we said. It's not income, it's borrowed funds. 3 payment plans: they can take a lump sum of money, they can take payments sent to them monthly, or they can have a line of credit that they access whenever they need it. Most people are typically paying off an existing mortgage, taking out some funds at closing. Maybe they need new gutters, a snow blower, a car, whatever, and then leaving the rest in a line of credit that they can tap into when their taxes are due, or the furnace blows up, or whatever. They do keep title to their home, and this is a big myth that I deal with pretty much every day. People say, well, okay, I guess, this is what I got to do. It'll help me out, but I know I'm giving the bank the house, or I'm giving HUD the house. HUD doesn't want the house. HUD does put a lien against the property, as you would with any mortgage. However, there is still title in that individual's name. If they decide to sell the house down the road, they can do that anytime they want. They pay off the outstanding mortgage, the outstanding balance, go down the road. You can use this program to purchase a home. So if you've got a senior that's looking to buy, maybe they're going from the bigger place down to a condo or whatever, they come to closing with their down payment. We come on board with a reverse mortgage for the remaining dollars. They purchase the condo, they purchase the home, move in, again, never make a payment as long as they live there. If they live there until the last survivor passes away, the home goes into their estate. Once it's in the estate, if an heir wants to move in and occupy it, they've got up to 6 months to refinance the home. Unlike a conventional mortgage where there would be a payment due the first of the next month, HUD says, no, let's have some flexibility there. They've got 6 months to pay it off. If there isn't someone inheriting it, it just goes into the estate. We got 6 kids, we're going to divvy this thing up, let's sell the house. They've got 6 months to then sell the house, and upon sale, pay off the balance that's owed. No penalties or anything like that. And if in fact the market is terrible, it's the middle of winter, we just got caught up in whatever, and it doesn't sell in 6 months, they can ask for 2 3-month extensions. As I'm saying here, there is no income to qualify, no medical requirements. Doesn't require good credit, no repayment during the life of the loan. I get a lot of people that say, well, I want to make payments. Well, that's what the programs to, whatever. Okay, they can if they want, but I doubt that very many ever do. We see all these ads, as you're saying here, Robert Wagner, Fred Thompson, Henry Winkler. The bottom line is, when we look at those ads, we think, where are you going to get your answers from? The unfortunate thing is many of those companies that they're advertising for are, I said, we're based in Houston, but there are so many of those that are advertising that are licensed in Wisconsin but have no presence here whatsoever. So they will take those phone calls into their boiler rooms, they'll send packages of information out, they'll send application packages out. This isn't a complex problem, but an application package is about 140 pages because Uncle Sam wants full disclosure. They want the senior to know everything that they can know about this program. So somebody in Oklahoma, California, New York, whatever, sends this package to your 85-year-old parent or grandparent with little squiggly lines saying, sign here, sign here, sign here. Our preference is, I do everything at the kitchen table. It doesn't matter where it is in the state of Wisconsin. I think I mentioned once I was up in Wasaki for an application. I didn't realize it was on the river and Michigan was on the other side. But we go to the home, we explain everything so that that person is very, very well informed. And in fact, there's another component of this. The client has to go through counseling by a HUD-approved counseling agency. It's typically done over the phone. That part you might as well do over the phone. But they want that individual, again, to be sure that they have all of their questions answered. I have people say to me, this sounds too good to be true. You're going to give me all this money. You're going to pay off my mortgage. You're going to buy me a new car. And I don't have to make payments as long as I live in the house. Something is wrong. And I tell them, well, when you talk to the counselor, ask him if I lied to you. And it makes it actually easier for me to be able to have their confidence that they know that I'm not going to hurt them, so to speak, as we just came up on here. Things that you don't know that could hurt you, the bears in the closet. Again, these are misconceptions, thank you, that are out there. I'm going to lose my home, the government will tell me what to do. They do anyway, what's the difference? Reverse mortgage is way too expensive. Reverse mortgages used to be very, very expensive. Now we have some options that are much less than they were. My kids won't like this, they're going to get hurt. Fannie Mae did a survey, over 90% of the kids surveyed, and I mean kids my age, said, Ma, burn it, burn the money. Go party, go whatever, pay off your bills, be comfortable, turn the heat up over 54 degrees, whatever. And I'm going to stop it there because there may be questions and I don't want to run over. If anybody has a question? Yep.
Is the 62-year-old threshold, is that standard across the board, every company, every state?
That's federal. That
federal.
is through HUD, through FHA,
okay.
yes. Yeah, and by the way, if one is 62 and one is younger, if they really have their back up against the wall, we can work with the 62-year-old, but we have to take the other one off title, which can open some dangerous doors down the road.
Is there a maximum purchase price on the property?
There's no maximum purchase price, and you might think that from HUD, but there's a maximum value that we can consider in calculating the benefit amount. So if they're in $1 million house, $2 million house, we're going to work with that client as the value did not exceed $625,500. So the benefit amount would be based on that. And again, obviously the vast majority of what we do is refinancing. In the last month I've had 2 homes that were in that $1 million range, but their mortgage balances were considerably less than the $625, so it worked out fine. Yep.
You mentioned what happens if somebody dies, what happens if the person that's the owner decides, I can no longer live there, I have to move into assisted living?
That's a good question. I mean, it does happen all the time. If they are out of the home for more than 365 consecutive days, it's what HUD terms to be an event, and they could call the note and say, you've got 6 months to a year to sell it, pay it off, whatever.
They've got a 1-year window and then they have to sell it.
Right, but if they were out of that home for 360 days and went home for a couple of days and went back in, the clock starts over. Sure.
If there aren't any payments, and you can virtually live there for almost ever, then you could potentially, if 62, today if you make it to 65, you're not, the likelihood you're going to make it to 95 is extremely well. What kind of interest and how do you eventually pay off this reverse mortgage that hopefully the value goes up instead of like we're going through now?
Well, we'll hope so. Right now, the interest rates, there are options. So you can have a start interest rate on an adjustable rate down around 2.25%. You can have a fixed rate at anywhere from 4%, 4.25% to 4.99%. The interest accumulates through the years on top of the balance. If you think about the fact that typically we're lending somewhere around 50% of the value, and at that rate, and assuming that we get back to hopefully a 4% appreciation rate on the property, you're going to see 3 to 4 to 5% interest over on this amount and the 4% appreciation on this amount. So hopefully the equity should always be there. But it's also insured by HUD so that if they should end up to be upside down the road, there is no deficiency. The insurance steps in. I mean, let's say that they pass away, the house is worth 100, they owe 120, or it's worth 500, they owe 600. HUD steps in and pays the difference. Yes, sir.
Assuming that there was no mortgage on the property, what are the fees involved in the closing transaction?
About $1,800, depending on the program. Again, you can pay discounts to buy the rate down. If you needed to max out the program, you would have HUD's insurance fee added to that. But somebody who's got a property free and clear and just wants to tap into a nice line of credit that, by the way, cannot be taken away later. A lot of the banks, people have their $100,000 line of credit, whatever. If they don't use it, it can be canceled. This cannot. It's guaranteed for life. So about $1,800, typically appraisal, credit report, filing fees, title insurance, closing fees, and recording. That's it.
Does this have to be your primary residence, or can it be a second home?
It can only be a primary residence. There are some programs out there that are not HUD that will work on a second home, and they usually have provisions in them that'll bite you. But primary residence only.
Can you use those funds to fund another property?
Yeah, and we've seen that on not a real regular basis, but yeah, you can do that. You can help out your kids, you can go on a trip, you can do whatever you want with it. There are no restrictions whatsoever unless the property needs repair, in which case we'll close the loan, hold the funds out, and use that money to repair. So John comes out and fixes some things up, or we get the home painted, scraped and painted. We're holding those funds to guarantee that you're going to be paid when the work is done.
Agreed.
Thanks.
Good job, Gary.